Markets will test for weakness. So it's not just that you take a position and you get it wrong. If you take a position, especially if you make it a public position, and we can see this like on open interest charts as well. So a lot of the time there'll be this huge build up in open interest in leveraged positions, and it's like data that everyone can see. And people will be like, okay, cool. So let's just say like there's a lot of long. So a lot of people are betting on the price of Bitcoin going up. And so they're all expecting it to go one direction. They'll all have a liquidation point, right? And that stuff is accessible too. So you'll see in the data, okay, so there's $1 billion of liquidations at this price. If the price goes down, the market is going to test that. Like it's almost inevitable. When there's enough leverage in a market, it'll get tested to the other direction because there's profit there. So it becomes game theory immediately, and people are going to test that downside. Liquidations are going to happen. They're going to have their own short, which not only are they earning funding on the short, but they're going to get paid for it when everyone else gets liquidated, and then they close the short once the liquidations are finished. And so you can try and find as many fancy ways of beating the market as possible, but in the end you got to be so careful because people are going to try and make you lose money because that's how they get money.